Hello and welcome back to Dukascopy TV. Now, for over a decade, to some, gold has been arguably one of the most tradable assets in the world. Back in 2008, when the price dropped by over 30%, people rushed from all over just to get a piece of the action. These days, though, it's looking a little copper-coloured, and it's not quite reacting as much as it used to. Well, why? Well, in the studio, I have with me Francois Savary from the group Reyl, here to discuss more on this subject. Francois, what's your current analysis of gold and the price at the moment that we're seeing?
I would say that you have two opposite views that are driving the market right now. You have on the one side the one who want to continue the trade on gold, which is a trade on liquidity, and the fact that over the last few years you had huge increase in liquidity by central banks, and they consider that gold is the ultimate money, that you need to own gold because there will be a debasement of paper money. And you have on the opposite side the people who consider that gold is absolutely not a currency, that there is purely speculation in the market. And those are the two views that are confronting. And for the last 2 months, I would say that the people who believe that the price of gold moved too fast, too far, are having the upper hand, but it can change in the coming months.
Some people, I know in the past, some people have said to me that they're now experiencing quite a bit of fun, in the sense that once, as you said before, it was such a safe haven, and now people aren't really necessarily sure where to look. And some people, for maybe who enjoy a more sort of riskier trading, are sort of finding this in a way quite enjoyable. Do you see this being the case, or is it still?
I mean, it's the rule of market. You know, when you have an asset going one way, or in only one way for so many years, there is an opportunity for the people who do not share the view of the market to try to go against it. The big issue down the road is to know, are those people going to be right? Or are the people who consider that gold is really the safe haven, the last safe haven, going to be right? And I believe that it's only over time that we will know if the one who play the gold price appreciation for the last 5 years are going to be right.
Now, Francois, we were talking about just a second ago the rise of gold and it being a safe haven over the last 10 years. We've got a graph behind us. Could you just talk us through this a little bit?
What is interesting in the graph is the orange curve, because what does it tell you is that lately you can see that when you look at the orange curve, you have the bull minus the bear. So those are the bears are the one who are winning lately, because they are really considering that the gold price went too fast, too far, and now they are trying to push for a consolidation on gold price. I believe also that one of the reasons why you had such an acceleration on the bear in the 2012, it's linked to the fact that people have reassessed their view concerning quantitative easing in the United States. Late last year, there was the idea that the quantitative easing 3 would come. Since February and March, it has been less sure, and I believe that's one of the reasons people became bear on the gold price. They consider that there will not be any quantitative easing 3 in the US, and I strongly believe that they are wrong. I believe that the US are going for further liquidity injection into the system.
Well, let's go on to that. I mean, for QE3, the relationship between gold, QE3 and the US dollar at the moment. What are your thoughts?
I believe that there is a strong relation. When you look from 2008 up to now, there is a close relation between quantitative easing and the movement on the gold price. And the big point lately has been the fact that the United States economy is growing faster than many people were expecting, and that it means that the central bank, the Federal Reserve, will not be able to go for quantitative easing. I believe that what we are experiencing in Europe, mainly the Greek and the Spanish situation, is bringing some tension and some stress in the system, and that the Federal Reserve will go for a quantitative easing. I believe that it's going to happen by June or July. They should do something. Why is it that important? Because if you go for quantitative easing, you inject liquidity in the system. It means that the dollar or all the paper currency are suffering from debasement, and then this is when investors want to get gold.
So yeah, so looking really into the future now, I mean, some investors might be thinking, well, sort of long term, do I still keep my money in gold? I mean, where do investors turn now? Because obviously it's a interesting time, really, isn't it?
I believe that you need to have a double strategy. We wrote a piece, it was in December, I think, where we said, okay, the price of gold went so far, so fast that no, you need to adjust your strategy. I believe that you need to consider your portfolio. You need to have a core holding of gold, and there is a second part of your portfolio that needs to be more trading oriented. It means that you trade gold because it cannot go to 2,000, 3,000 quickly. So you need to be on the one side with a core position, you need to maintain this position, and you need to trade another portion of your portfolio in gold.
And do you think in the near future we're going to see a sort of spike like we see in that graph at the end there?
I believe that we are going to see a spike. I believe this is one of the reasons we took the opportunity lately to increase again our exposure in gold. And we consider that there is quite a chance that the gold price is going to spike.
Francois, thank you very much for coming into the studio and sharing your insight with us.
You're welcome.
That's all we've got time for here on Dukascopy TV. We'll be back properly on Monday with more updates and interviews, but until then, have a great weekend. Goodbye.